CNBC-TV18, embarking on a quarter century of excellence.
Hello and welcome to this special program on what is a very special day for us here at CNBC-TV18. We are 25 years old today. And to mark this milestone, we have with us Raamdeo Agrawal, Chairman of Motilal Oswal Financial Services. He's our guest editor. Raamdeo, of course, is someone who needs absolutely no introduction at all.
All right, exciting show lined up for you. Raamdeo is someone who is regularly referred to as the Warren Buffett of India. Raamdeo, it's a pleasure to have you with us here on the show. We will, of course, talk markets, politics, money-making ideas with him. Raamdeo's big bet, by the way, is Zomato. He has been a big votary and champion of the theme of value migration, and he thinks that the runway for growth for Zomato is a long one. So what we've done is, very interestingly, invited the Zomato management also on the show in the next half hour. Very exciting conversation lined up. We have the Zomato management waiting by with us. So let's go straight to, discussions. Raamdeo, first on the market, we can't start the show without asking you your view. And we're, of course, celebrating 25 years of business news excellence. Yes. So thank you for being a part of our journey. I think you have been with us throughout these 25 years, right?
So that's what I was, my congratulations to CNBC and the entire team. And I'm really fortunate to have been coming here for last 25 years on various occasions. So I've seen the entire journey from somewhere in Worli to Empire, then here. Yeah. So it's been amazing thing, and the consistency of CNBC brand, and CNBC has changed the way people look at the market.
Yeah.
The way accessing the market. So all the screens you see of the business channel, they look CNBC.
The consistency of the CNBC brand married with the consistency of the Motilal Oswal brand, right? It is brand building together, and that's how this equity market cult has also sort of developed. Yes. We've seen it grow in front of our eyes.
Huge contribution of yes. CNBC in spreading the equity culture, knowledge of the equities. Yeah. I mean, a lot of, I get to hear a lot of people that all the YouTube actually hosts your programs. So they learn, they play repeatedly, and you create those programs and people learn out of that. So beginners, they get, so a lot of people are benefited in very different way apart from watching it on a day-to-day basis.
And thank you so much, Raamdeo, for being a part of it for the last 2.5 decades. So we rely on you, I can say that much. We spoke around the time of Diwali.
Yeah.
And at that point you had said, one way or the other, post the state election results, market is running up.
Yes.
It's going to run away.
Yes.
What a run we've had, right, in the last 3-4 days. And your call was that we will get a rally all the way into general elections.
Yes.
I mean, you reflect on what you said and what we've seen.
Yeah, so we have started with a, huge 6s and 4s with the state election. And I mean, at times it is scary to see at what pace market has moved from 20 to 21,000. It's been just few days, So I don't think we can maintain this pace. We need calibration, otherwise wrong things start happening, wrong kind of trades start happening, wrong kind of money starts coming in. So I think we need a little breather. But I don't know what will happen in the short run in the market. But, the real good thing about, actually India is Sone ki Chidiya, maybe in the past in the economy, but I think Indian stock market is Sone ki Chidiya. If you see, we are at about $4 trillion plus counting. And it has been very consistent. If you see last 20-25 years journey, at about 12 to 14% kind of a compounded return. Where can you get it? In a very predictable way. And I mean what I'm saying. Yeah. It doesn't break down. Of course, in 7-8 years, when you do 6-7x expansion, then of course, it corrects one wholesale. But otherwise, it has been amazing journey. And I think post-COVID, the new journey started from 8-9,000 index. And we are building up. At times it feels that are we in new era or something like that? Can we get 15, 17%, 20% compounded? I would think that has little caution. And from this level, build between 12 to 14, build 12% compounded rather than 14% compounded in your expectation. But a lot of wonderful things can happen. Oil can fall to $50. Rupee can strengthen. We can have a compounded growth of 7-8% for many years to come. So it is India's decade, maybe India's few decades. And in that, corporate profits can also grow at 15-17%. Digital era is there. So we have companies which can grow very rapidly. So the complexion of top companies can change the way it has changed in US. I think there is a chance that here also we may find 30-40% growth for these kind of companies are new normal altogether.
Just one briefly, Raamdeo, the election verdict itself, just to go back to that. What does it mean from a market point of view, political economy wise? Which sectors will, because we've seen a lot of reform and now the conviction that more will happen will get strengthened.
Yeah, so it's more of the same. But what happens is that if you keep growing at 6.5-7%, I'm not talking about anything higher. If you keep growing at 6.5-7%, your nominal GDP grows at about 12%, but the tax collections they go at 13-14%. Now, when tax collections grow like that, there is a lot in the hands of government to spend. There is so much of infrastructure deficit. We can spend $10 trillion and still we are not done. So there is a huge backlog of infrastructure and your defense and railways, and so I think the real thing is that how well economy does and how is the government collection. So government tax collections are the core of and I mean when you are a $1 trillion economy, you can collect only say 12% or say 15% tax. So you can collect $150 billion. When you have $4 trillion, you can collect $600 billion. When you are $8 trillion in next 5, 6 years, 7 years time, you'll be able to collect say more like $1.5 trillion kind of taxes. So the size of the projects, the variety of the projects you'll get to see, the size, they will just explode. So I think like if you hear Mr. Gadkari, he says that I don't have any shortage of money. I'm doing 1 lakh crore project between Mumbai and Delhi. So those kind of 1 lakh crore today is looking very big. But a day will come when he will talk about 5 lakh crores a single project.
Okay.
So that's the kind of expansion we are going to see. I hope there is no break, but nothing happens in a straight line.
So, you know, from a stock market perspective, right, Raamdeo, PSUs have done really well.
Yes.
But there are so many spaces under that. There are PSU defense companies, PSU power companies, banks. From here on, where do you see both value and growth in the PSU basket?
Yeah, so see, PSU basket were beaten down big time. I mean, they didn't, I mean, they wanted little lower valuation, but not so much lower. Like if the index is trading at 22 P multiple, they got stuck in single digit, like 6, 7, 8 P multiple. And some of them are large monopolies, very important part of the economy, like all the oil companies, your power grid, your some finance companies.
Coal
also,
India.
they were all at, in fact, low single digit P multiple. So obviously, I mean, it's like saying that in South Bombay, property prices have gone from say 50,000 rupees per square foot to a lakh rupees per square foot. But in Andheri and Bandra, it is still at 20,000. It can't remain. So there is an arbitrage, and I think under this government in last 7-8 years, I believe at least the banking side is being managed much better than the way it was managed earlier. There is no directed lending. There is not much of interference in their work. So I mean, all those things are playing out, and finally, when the market is taking off and other markets are at 25, 30 P multiples become normal, these companies must go up. And they are very important. And they were an important part of the infra build-up. And the moment infra build-up started, your defense build-up started, I mean, the story
But some of these companies have rallied a lot, right? Like the defense space, for example.
Yes.
Do you think there's still more growth there?
Frankly speaking, I have not been beneficiary of this.
Okay.
So the guys who have studied more about it, ask them. But I think this is a good time for all the companies which are running well. This is an amazing time for Indian equities.
Raamdeoji's big bet has been financials, banks, capital market plays he's been extremely bullish on.
Yes.
Those remain the focal kind of points where a lot of wealth can be made in the next couple of years?
Yes, because the shift of Indian retail, which was, particularly it was a bank-related kind of savings. The first fall point was the banking or maybe to some extent insurance. But now, thanks to COVID, digital onboarding and digital infrastructure and, this option trading being popular, you see what kind of a participation you're getting. We are getting about 3 million customers per month, 100,000 customers per day. I mean, we are talking about 100. I think I just saw November data. It is 133 million as of last month. So we are headed to become 250, 275 million. So my sense is that demand for equities will continue for next 4-5 years without any problem.
All right.
Without any problem. So in fact, particularly if the continuity of the government is there, then it gets strengthened even more so. So I would think that in that backdrop, you have to see which are the companies who are able to scale up And maybe at index level it is expensive, but at individual company level, the new stories, the turnarounds, the companies which are
digital focus,
new companies which is getting listed. In fact, this is a amazing time, once in a lifetime kind of opportunity for unlisted companies to come in the market. The large unlisted companies must come, create wealth for themselves and create wealth for the nation. Let the people per se participate. And I'm sure the guys who get listed, they will have, because I'm listed, I know the benefits of listing is more than remaining unlisted.
Okay. Well, you know, one space that you've been really bullish on and one stock is Zomato. So what we've done is we've invited the management of Zomato to chat with us. Very interesting discussion lined up. So let's slip into a very short commercial break. Don't go anywhere. When we return, Akshant Goel, who's the Chief Financial Officer of Zomato, will be with us.
CNBC-TV18, embarking on a quarter century of excellence.